Hey everyone, thanks for joining us for another deep dive. You reached out with a question about the Nasdaq, and it's a good one. You're looking to really understand what it means when the Nasdaq enters correction territory.
Yeah.
And what history might suggest could happen next. And it's timely because it's been happening.
That has been happening.
So we're going to explore all that with you today. You shared a really interesting article from the Motley Fool.
Yeah, great article.
So we're going to dive right into that.
Okay, sounds good. Yeah.
So the Nasdaq's been doing pretty well for a while, but then recently it kind of took a dip.
Right. It's, well, the article says it's officially fallen more than 10% from its high point.
Okay.
And that high point was back in December.
Got it.
And this drop actually happened earlier this month. And a big factor seems to be all the talk and uncertainty about President Trump's tariffs.
The tariffs.
Right.
Yeah, those have been in the news a lot.
Absolutely.
But it's not just the tariffs themselves, right? It's like what they could mean for the whole economy and especially for the companies on the Nasdaq.
Exactly. That's a key point the article makes. Everyone's worried about prices going up.
Yeah, makes sense.
And if these tariffs do happen, companies would probably have to pay more for all sorts of things, materials, components, anything they import.
So their costs go up.
Yeah, their costs go up. And then they might have to raise prices for us consumers, too.
Right. So then people might buy less stuff.
Exactly. It's like a chain reaction.
Mm-hmm.
And all of that could really hurt those companies' earnings.
Which isn't good if you're an investor.
Not good at all.
Uh-uh.
And, a lot of companies on the Nasdaq, especially in the tech sector, their value is really tied to their growth potential.
Right. If they're not growing as fast.
Exactly. Investors get nervous.
Makes sense. And the article also mentioned something about the Federal Reserve, I think.
Yeah, this is where it gets even more interesting. So the Fed, they've been hinting at maybe lowering interest rates.
Which usually is good for the stock market.
Right. But if these tariffs cause inflation to spike, well, the Fed might have to rethink that whole plan.
So even more uncertainty on top of everything else?
Exactly. And that uncertainty can make investors a little skittish. They might start shifting away from those high-growth stocks that depend on a favorable economic environment.
Okay. So we've got kind of a domino effect here.
Yeah, kind of. But the thing is, it's not all doom and gloom. The article does point out that things haven't been just going down, down, down.
There's been some ups and downs, right?
Right. It's been a bit of a roller coaster ride.
Yeah.
And some of that's because of what President Trump has been saying lately.
Yeah, what's he been saying?
Well, he's hinted that he might be willing to be a bit flexible with the tariffs.
Okay, so not set in stone.
Not necessarily. He's even talked about possibly exempting certain industries like pharmaceuticals and semiconductors.
Interesting.
And he's also mentioned potential breaks for some countries. So basically, he's suggesting that things might not be as bad as everyone initially feared.
So like a little glimmer of hope.
Yeah, a little bit.
Yeah.
And that glimmer of hope actually had a noticeable impact on the market for a short time. Yeah, the article mentions that right after those comments from President Trump, the Nasdaq actually climbed out of correction territory for a bit.
Wow. So words really can move markets.
Oh, they absolutely can. But as we all know, market sentiment can change on a dime.
Yeah, nothing stays the same for very long.
Exactly. And the article points out that by Wednesday, the Nasdaq had unfortunately dipped back down into correction territory.
So the worries haven't completely gone away.
No, they haven't. It seems like investors are still a bit on edge, waiting to see how things actually play out.
Right. So we've talked about all these different factors behind this recent downturn, but your initial question was about history, right? Like,
Yeah.
What's happened in the past when the Nasdaq has gone into correction territory? What can we learn from that?
Exactly. And thankfully, the article provides some really good historical context.
Okay, so what does history tell us?
Well, the article highlights 5 recent examples of Nasdaq corrections.
Mm-hmm.
And it looks at what happened in the 3 months following each one.
3 months. Okay, so let's go through them one by one.
Okay, sounds good. So the most recent one before this current correction happened on August 2nd, 2024.
Okay.
And in the 3 months after that, the Nasdaq actually gained a pretty solid 8.7%.
Oh, wow. So a pretty decent bounce back.
Yeah, a good sign. But the next one's a little different.
Okay. This is getting interesting.
This one started on January 19th, 2022.
Okay, 2022.
And after that correction, well, the Nasdaq actually kept going down. It fell another 5% over the next 3 months.
Oh, so it didn't recover right away.
Not this time.
Yeah.
And it's important to remember that each correction happens in its own unique context. you know?
Yeah, everything else going on in the world.
Exactly.
Yeah.
And back in 2022, we were dealing with rising inflation, and the Fed was just starting to raise interest rates.
Right, so things were a bit shaky to begin with.
Exactly. So that probably contributed to the continued downturn.
Makes sense. Okay, so that was one where it didn't immediately bounce back. What about the others?
Well, the next one started on March 8th, 2021.
Okay.
And 3 months later, the Nasdaq was up a significant 10%.
Okay, back to a positive rebound.
Yep. Then there was a correction that began on September 8th, 2020. And this one saw an even stronger recovery.
Really?
Yeah, the Nasdaq surged 16% in the 3 months following that correction.
Wow, so it more than made up for the dip.
Absolutely.
Yeah.
And finally, there was the correction of June 3rd, 2019. And that one was followed by a 7.4% increase over the next 3 months.
Okay, so out of those 5 recent corrections, 4 of them saw gains in the 3 months afterwards.
Exactly. And the article makes another interesting point.
What's that?
In all of these recent cases, the Nasdaq didn't stay in correction territory for very long. It usually bounced back within days or a few weeks at most.
So the recoveries tended to be pretty quick.
Yeah, relatively speaking.
That's good to hear. Because it's easy to get caught up in the moment and think it's the end of the world.
Oh, absolutely. But looking at this historical data, it does offer some perspective. You know, it shows that the market has a tendency to rebound after these shorter-term dips.
Yeah, it's a good reminder that sometimes you got to zoom out and look at the bigger picture.
Exactly. And speaking of the bigger picture, the article also takes a look at the broader stock market, not just the Nasdaq.
Okay, so it's not all about tech stocks.
Not at all. They actually cite some research from Charles Schwab and Morningstar.
Okay, familiar names.
Yeah, they're pretty well known. So these guys, they looked at S&P 500 market corrections going all the way back to 1974.
Wow, that's a long time.
It is. And their key finding was that out of all those corrections, only 6 turned into a full-blown bear market.
A bear market. So that's when the market drops 20% or more, right?
Exactly. And, you know, their markets, those are the ones that really scare people.
Yeah, those are the ones you hear all the scary headlines about.
Exactly.
Yeah.
So the fact that only 6 out of all those corrections since 1974 turned into bear markets, that's actually pretty reassuring.
It is. It kind of suggests that corrections are more like a temporary blip than a sign of a major crash.
Yeah, that's a good way to think about it. Historically speaking, stocks have tended to recover pretty quickly after these corrections.
Okay, but I'm guessing there's a but coming.
Well, yeah, there's always a but when it comes to the market, right?
Right, because nothing's guaranteed.
Exactly. And the article makes sure to point that out.
Yeah.
Past performance is never a guarantee of future results.
So just because things have gone a certain way in the past doesn't mean they always will.
Right. The market can be unpredictable. It's influenced by so many different things.
There's what's happening in the world, the economy, politics, all sorts of stuff.
Exactly. And there are always those unforeseen events, those black swan events that nobody can predict.
Right. Those can really throw things off.
They absolutely can.
Oh.
So, like, you know, even though the historical data can be helpful, it's important to remember that it's just one piece of the puzzle.
So don't base all your decisions solely on what happened in the past.
Exactly.
Okay, so we've talked about the reasons behind this recent correction, and we've looked at what's happened in the past. But now the million-dollar question, what does all this mean for investors right now?
Yeah. Should you be buying Nasdaq stocks?
Right, because everyone wants to know that.
Of course. And the article actually gives some pretty solid advice, I think.
Okay, what do they say?
Well, they don't give a straight-up buy or sell recommendation.
Which makes sense.
Yeah, because it's not that simple.
Nobody has a crystal ball.
Exactly. But they do emphasize one key principle that holds true whether the market's going up or down.
And what's that?
Focus on finding high-quality companies that are trading at reasonable valuations.
Okay, so it's not just about chasing the latest hot stock.
Not at all. It's about looking for companies with strong fundamentals that are priced attractively.
And those opportunities can come up in any kind of market.
Exactly. And they even give some specific examples of companies that fit that description right now.
Really? Like who?
Well, one example they mention is NVIDIA.
Oh, yeah. They're big in the AI space.
They are. And according to the article, they're currently trading at around 25 times their expected earnings for the next 12 months.
Okay, so 25 times earnings. What does that mean?
Basically, it means that for every dollar of profit NVIDIA is expected to make in the next year, investors are currently willing to pay $25 for a share of the company.
Okay.
Which might feel like a lot.
Yeah, it does.
But here's the thing. Earlier this year, NVIDIA was trading at 50 times earnings.
Whoa. So it's like half the price now.
In a way, yeah. It means investors are paying less for each dollar of NVIDIA's expected future earnings compared to a few months ago.
Interesting. Okay, so that's one example. What was the other company?
The other one they highlight is Amazon.
Okay, the online shopping giant.
That's the one. They're currently trading at about 32 times their forward earnings estimates.
And what were they trading at before?
Well, towards the end of last year, they were over 45 times earnings.
Okay, so another example of a company that's gotten a bit cheaper.
Exactly. And the article suggests that if history repeats itself and the Nasdaq does bounce back after this correction, companies like NVIDIA and Amazon, these strong companies with now more attractive valuations, they could be the ones leading the charge.
Okay, so it's like they're on sale right now.
Kind of, yeah. If you believe in their long-term prospects, now might be a good time to take a closer look.
And the article also talks about the importance of taking a long-term perspective, right?
Right. They emphasize that historically the Nasdaq has always delivered gains over the long term.
So even though we see these ups and downs along the way, the overall trend has been positive.
Exactly. And that's a really important point to remember, especially when you're feeling a bit anxious about the market.
Yeah, it's like don't get too caught up in the day-to-day fluctuations.
Exactly.
Okay. The territory, mainly because of concerns about potential tariffs. But recent comments have offered some hope. And looking back at history, Nasdaq corrections have often been followed by pretty quick recoveries.
Right.
And the key takeaway for investors is to focus on finding those quality companies trading at reasonable prices. And the article gave us some examples of companies that might fit that bill right now.
It did. So here's a final thought for you to consider. Given all this information about Nasdaq corrections and what we're seeing in the market right now, how will you evaluate potential investment opportunities in the coming months? What criteria will you use?
That's a great question for everyone to think about.
It is.
Thanks again for bringing this topic to our attention. And thanks for sharing the article. It's given us a lot to think about.
My pleasure.
And thanks to everyone for listening to this deep dive. We'll catch you next time.